Hey everybody, what's happening? Jamie Setley here, SB Trade Desk, Midweek Strategy Members Webinar, and assuming that you can hear me and that you can see the screen, we'll pull up US dollar here. Just give me some confirmation that you can. Good morning, Jeha, how are you? All right. All right, so hold on one second here. Okie doke. I did a free webinar last night. Need to do one of those every once in a while for marketing. It's not really my thing, but because what I care about is you guys. But anyway, if you caught that, we'll look at a lot of the same charts here, but go a little more detail. So US dollar, the broad view, we've been waiting forever for a breakdown, and it just hasn't happened. We'll focus more on the individuals, but I guess when we zoom in to like a shorter term chart, this is the weekly, you can still see the potential there for this big kind of major 4-year topping process. In fact, it all started really back in March of 2015. But when we zoom in to like the daily, right? Here's a daily chart and go back to the high from December. You do have a 5 down, right? You got an impulsive rally, a corrective decline, 3 waves down. So it's natural to think, I believe, that we go A, B, C, and we actually go up pretty close to the highs up here without breaking them, and then we roll over. So one thing that I have had problems with, or I think is a bad habit, is actually trying to kind of, you're trying to move too far ahead, if that makes sense. What I mean by that is, rather than saying, well, I think we go up here and then I'd be, and then we roll over, say, you know what, I think the move from here, right, from here is higher. So we want to be positioning for something on the upside in the dollar near term. And then we'll be on alert up here, because it doesn't mean that the market can't keep going, right? Maybe we go all the way up to 12,440, which would be the next parallel in the channel. You just don't know. So rather than focusing a couple steps ahead, try to focus on the present, okay, and let that guide you. So let's zoom in even more. So let's go to an hourly chart. All right, so here's the hourly. This rally that we had started late last week, so last Thursday, right? So here's the, A, B, C. Since then, we've had very, very little on the pullback front. So I'm looking for us to pull back a little bit. You can see that, excuse me, when we talk about euro, getting up to 1370 or something. I still think the euro rallies up to 1370, by the way, even though I'm not long right now. We'll revisit that, maybe throw in an order here in a little bit. But I think you get a pullback, and then you'd be looking for support exactly where. I'm not quite certain, but I have ideas. I'd follow the 200-hour average. That might be a place to look. That would be around 12.1, 12,200 or so. Just for argument's sake, if we were to get a pullback from here, if this is the first impulse and the next wave higher, 12,181 is 61.8, 50% would be right there. That might be a good spot to look. But Yeah, that's the idea, I think, is to kind of look for a minor pullback here in the dollar and then look higher. All right. So that's my basis for essentially the next couple of days. Um, so a little bit of back and forth, a little pullback, then higher. When you look into seasonals, this actually makes a lot of sense. I noted in the update last night with Euro that April is historically the best month of the year. So if we bring in Euro seasonality, you can see right here, April's historically really good. And the seasonal tendencies tend to bottom out over the next few weeks. Um, if you look at 10 year, it's actually this week. If you look at 5 year, it's next week. 20 year and 10 year is actually, and 15 year, sorry, is this week. So we're in that neighborhood, but we do have to let the price kind of guide us. So let's move on over to the euro. Chart from last night, no change here, right? Looking up towards that 1370, maybe 1380, and then we'll see. It's far from clear to me. This little move that we had this morning down to a low, does that do a whole lot of, does that really change the situation? Probably not. I think it's still a 1, 2, 3, 4, and then 1, 2, 3, 4, 5, 5, right? So I think it's right to look for resistance up here around 1370, 1380, and then again, then we'll have to kind of reassess and see what the deal is. But I think this daily chart is super important. So 2017, 2018 line, right up there too. 50-day average in black, right up there too, right? As we mentioned, month open, 1370. So you've got really a solid area to look at up here for, a big barrier in euro on the upside. So that is where immediate focus is on euro. Now that said, we are seeing some euro crosses, really break out. Euro CAD was one, kind of annoyed that Euro CAD and dollar CAD and all that stuff. We were kind of on that late last week for upside, and had actually had a Euro CAD, was stopped at a break even. Then now, of course, it's like 500 pips higher or something. That maybe says more about CAD and Aussie, of course, than it does about Euro. But pound dollar, not going to focus too much on this. Just the levels that kind of look interesting to trade to me are essentially now. We've been bouncing around, the support level all day, all night, all day, and I'd be looking up towards that 3250 area. Week open 3250, 618, 3254. Good spot up there. That might be a short up there. If you want to try to take a long in the meantime, just trade a very small bounce. Go for it. Cable is one that, frankly, is a bit annoying with all the Brexit stuff. You can have a nice trade, a good entry, and you get taken out on a washout for no apparent reason because someone said the word Brexit. Not my thing. Dollar yen. We did get the 5 up from back here on 227, and you do have resistance from the line that connects the highs, right? Right there, the red line. So you can make a case that you have, formed some sort of a top. How would we enter this trade if it were indeed a top? Because at this point, we don't really have solid price action to establish a short. One way to do it, see if you can get a short-term bearish fork off of this. that could be something to work with. Absolutely, right? It actually works out pretty well. So at this point, you'd be looking for resistance probably around 1180. We're currently 1170. I feel kind of silly talking about these really tiny ranges. I'm like, here's resistance, and we're 10 pips below it, but that's just kind of what you got to deal with. Deal with what the market gives you, because you can't force the market to move in bigger moves. But that's where I'd be looking, around 1180 or so. You can see that the month open has been support ever since we opened the month. So all week essentially, and it was support here on 3-1. It was support on 3-4, which was on Monday, and it was support an hour ago. All right. So we kind of need to break below that. I'd look for resistance up here again, 1180. And if you broke back down, below this median line, which has been support for the last 2 days, then you'd actually have reason to get a short on and just, stop it out maybe up here at 1190 at the high of the day. So that's certainly a possibility moving forward. Do want to real quickly back to this euro, wrong chart. Where is my short-term euro chart? Where have you gone? Short-term euro chart, 1 second. All right. That high volume level is 1307 from the other day, and might be able, if get through European session here, but it might be worth leaving order back down at 1310 and 1280 stop, targeting 1370. So you would have a 2-to-1 risk reward on that, 60 pips up, 30 pips stop. And at this point, you do have at least some sort of short-term trend recognition that you may have turned the corner with the 200 average on the 10-minute chart, which actually was resistance here yesterday, as you can see right here, and we've turned back above it. So that's something to look for a very short-term entry. I hate moving to these really short-term charts, but again, the market's just not really giving you anything else at this point. Okay. All right. So again, with the context of our US dollar chart that we started with, maybe looking for a pullback from this run before you go higher, does make some sense to look at euro on the upside here for a little bit and dollar yen on the downside here for a little bit as well. All right. The commodity currencies, which are just getting absolutely smoked right now, CAD in particular. So let's go to the dollar CAD chart. You are at the 618 of this drop. That said, it does not seem as though there's a whole lot of doesn't seem like there's a whole lot of stopping this at the moment. So what I would look for here near term, this parallel that was previously resistance, which I'm throwing in blue, is actually, I guess you can mark it as a little bit lower because we want it on these highs. So we'll do that. Not that low. Something like that. There you go. All right. So that lines up obviously with the highs over here from 124. So that would be the level I think to look for support over the next couple of days. 33.75. This is an instance where you could get a really tight stop. Stop it down actually a little bit below today's low at 33.48. And I'd be looking just for upside towards 35. I'm not looking for a whole lot more than that right here. I realize that the fundamental news and all that stuff is absolutely dreadful with the Canadian dollar, but that's how markets work. So, don't get married to the idea of a long dollar CAD at this point. in my opinion. Do want to see where you could have the potential for a bigger move on the upside. And if we zoom into this a little bit here, go to get rid of that. If we draw a shorter term fork here, so just go back to the Feb low that we had. And you can see you've got the center line here of this more bullish fork would actually also be around this area. So even a 60-minute chart, right, you can see the action that we had on it leading up to this event. So yesterday's trade, you know, around it, median line zoom, and this brings in the actual setup of the zoom and retest, right, where you get the market zooming through the median line, then you want the retest, and then that's your entry, and that again would be right in this region, and then you can take it up to the next parallel, which in this case more or less intersects the 135 area, okay, from both parallels. So, you know, there is, feels like chasing, but again, you can use kind of median line analysis to chase, so to speak. I will say that if we are in a bigger CAD move, bigger dollar CAD upside, bigger CAD decline, then your upper parallel, you know, is obviously in play. But for now, just think about the entry down near 33.80 or so as a possibility to take that up to the 35 figure. Aussie dollar. So this is a serious breakdown. So it took forever, it took a while, but we are now focusing on 69.70, which we've been talking about for a while. The order that I've got in, I'm basically just looking at these old lows over here. So, you know, you're talking 70.70. Hold on for a second. Yeah, that was, oh wait, hold on here. Oh, that got, hold on, what the hell? I just realized that my trade station did not update, so I didn't think I was triggered overnight, but I was triggered at 70.50 overnight, so that could still work out. Huh, all right, weird. Well, I would say that, look, even if that we're going down to here is what is my belief, okay? But if we do get a bounce, I think you still have that 70 area as resistance, and we can look at this in a couple of different ways. So you've got the longer term parallels that we've talked about that are right here. You can see the old lows, all right, and you can actually draw in a channel from the top up here from 131, okay? So if you draw that, look where that lower channel is. It's right down here. It's right at the 69.60s, 69.70, maybe a little lower, 69.50 at this point that we were looking at. But also the center line from that would be right where we'd be looking at resistance anyway, 70, 65, 70. Okay. So you've got a good barrier again up here if you do get a little bit of a bounce in Aussie. Kiwi, actually, if you wanted to go contrarian, and a little longer, I would look at Kiwi as an option for a long. You can see the October, November line. Actually, it's just October, isn't it? Yeah. So it's the October 8th low and the October 26th low, right? That was support, of course, back on 1-3, flash crash day, as we all know. And you've also got the 200-day average right there. And this is really subtle, but that actually is daily reversal resistance, or sorry, daily reversal support. Remember, take the low day or the high day and then throw it into, throw a line over the close. So this has happened a bunch in Kiwi this year. You can see the rally up here on 131 and 2-1 actually hit daily reversal resistance right here, right? You turn down. Well, you can do it again over here. High day right here, throw it over the close. It was resistance 4 days, 218, 25, 26, and 27, right? And you came down. Well, now we can throw a line on this close and you get 67.37, which again is more or less in line with this line and just a hair below the 200-day average. So you do have a spot to look at for a Kiwi bounce, okay? All right, let's see what else. All right, so that is our deal with FX for the moment. If we look at some crosses, big base in Euro Aussie, head and shoulders bottom, right? Shoulder, head, shoulder. Big breakout bar today. Already have some short Aussie, but you could be looking to be, buy, I think, Euro Aussie around 68, 160.80 or so, which is just the high here from last week from 3-1. And probably give yourself a stop out underneath maybe the monthly or week open, which is going to be right here. It's basically 60.10. And your target for this, by the way, you see these old highs over here? So that's from September and October. Interestingly, if you draw your measurement from this, so take the width of the head and shoulders and expand it, you actually get the exact same price. So 163.60. So you do have a good target up there. Obviously, the yearly open up here too is going to be a level of interest at 62.65, but still some good upside potential in Euro Aussie, and makes sense given the continued downside potential in the Australian dollar itself. All right, Euro CAD. Oh, that's the worst. So we had a long, we were stopped out at break even last Friday. And then, of course, it goes berserk on the upside. So we're tracking this forever, and just bad execution. But yeah, you're looking here at this point, you've kind of gone through everything. So your next level on the upside is probably going to be up here around 154 with Euro CAD, okay? CAD Yen, another one that we've looked at recently, right? We had the reversal to 200-day, talked about this, had a beautiful tag of this trend line back to the Brexit low, wrote about this on Sunday night. And we'd now be at a level where I probably would have had a target, but we never got the entry. We're looking for 50, 84, 60 entry. So, but good chart nonetheless, still downside potential here. In fact, this is maybe breaking a trend. You could be breaking a trend line here. So this is one that we could still concentrate on for the next couple of days. If you did get any pullback in dollar CAD, right, a little bounce in CAD, you might be looking at this as resistance around 83.59 or so. It's just these old lows. So former support back here from late February. It's also a level over here from December low. So that would be a spot to look at as well, to get involved maybe with some dollar or some CAD weakness, but doing it through CAD yen, which might be a better option. All right. See here. All right, moving on. We've got, that's pretty much it for FX for me at the moment. I do want to look at some equity stuff. So I did talk about this last night during the free webinar, and you can see we're looking at advanced decline. So this is advancing issues in blue and declining issues in red. You can see today is actually a really negative day. At the moment, we're NYSE advanced decline is minus 1,000. That's so far the lowest you've been since the 7th. So we're starting to see deterioration. It's kind of a tough word sometimes. We're seeing deterioration in breadth, right? That's what breadth is. Advancing, how many stocks are going up against down. And you know, due to the construction of indices, a lot of time it takes kind of a prolonged divergence in breadth before you get, you know, the indices kind of realize it, because they're a lot, you know, cap weighted, and the big stocks hold up the market. You know, so you can have a lot more stocks going down than up, but it doesn't mean the indices necessarily have to go immediately. Sometimes they do. You know, back here at the high in January of last year, we had a very similar setup with breadth. So the advanced decline actually over here, again, very subtle, did not make a new high on the day of the 26th in 2018 when the indices made a new high. Okay. But then, of course, the market got absolutely demolished for a couple of weeks. We had the VIX apocalypse and all that stuff. But we just had that happen. So on 3/1, which was Friday, when we made a new high, again, closing prices, closing high in the indices, we did not make a new high in breadth, right? You can see it right there. Draw a little line. That's an important development. It's something that had not happened since this entire rally started, right? Now, it remains to be seen how this wants to play out. Like, do we get a bigger drop, right? And then come back and make yet another high like we did over here when we had a bigger top last October, right? In last year, in August, breadth topped out. You got a decent drop, right? Lasted about a week. Then you went to another high in equities, but breadth lagged badly, okay? And finally, they all caught up to each other, right? Stocks caught up to breadth and vice versa. So let's see if we can get some levels to figure that stuff out. Let's see here, go to over here. All right, so when I'm looking at, this is the S&P futures. We do have a wedge break here. I would put Monday's low is really the spot to be, where things start to fall apart. So that's Monday's low. Again, in futures, that's 27.6750. And you get below there, and you know, I think at that point you've got enough evidence to just kind of say this is going lower. Next stop 27.36, but wouldn't quarrel too much with the short-term stuff. I would just kind of say it's bearish at that point. Okay. If we look at the NASDAQ, this is actually XLK, which is an ETF, the tech ETF, which is pretty much Microsoft, Intel, and Apple. Those three stocks make up 33% of that index. But if we were looking at this, you can see that we're getting fairly close to a spot. But if you get below this median line, then your focus down here is about 69.30. But if we go to the NASDAQ futures, it's the same deal, okay? To me, Monday's low is the important spot. And then at that point, you actually got a pretty clear potential stopping point, at least in the interim, and that's going to be about 69.50. You can see the 200 average on this 4-hour chart. It's also the parallel over here that was resistance back in November and December, and by the way, in early February, and by the way, support in mid-February. So that's a really big spot to look at. Oops, did the wrong one. Hold on for a second. So yeah, right there, okay? That's where you'd be looking for any sort of a bounce. But to me, that looks kind of like a magnet, right? So 69.50 on NASDAQ futures is where I'd be looking. Pretty decent drop from here. We're currently 71.30. All right, let's move on to some metals and energy, and then we can do questions. All right, so silver is the one that we've been following, or at least I've been following the closest. We're kind of in the area where, you know, kind of interested in getting some sort of a low. The pitchfork support is right here. That's the biggest level, I think, 1495. That's the lower parallel here. You can see the other parallels within this have really been something. You've got resistance perfectly twice this year, both in January on the upper parallel. You do also have the center line, which was really beautiful resistance, breakout, support a bunch of times. We broke below it here late last week. And this level's, you know, on over all of these highs and everything else. So that's where I'd be looking. All right. Also, if you step out and look at a weekly chart, you can see that we're on the 20-week average. 10's above the 20, kind of short term, but when you think about it on a weekly chart, 1020 is actually 5100. So it's a 5100 day average. That's what you're looking at. You can see that, you know, when we've had good rallies in silver, you've had support register either very close to the 20-week or right on it. So we're in the vicinity now where I think we should be alert for, you know, some sort of positive action in silver, which, you know, by definition probably means that you're going to be looking at some positive potential action, I should say, in gold. All right. Now here's the gold chart. Again, this to me is not as clear as silver. You know, you would have liked to see you stop around 1290, frankly. Okay. The next level is simply the low over here from January 24th. Now, on a relative basis, gold's been a little stronger, right? You've got gold, you know, still above the 124 low. Obviously, that's not the case when it comes to silver. The 124 low in silver is over here. So that does represent kind of a minor divergence or something to be aware of potentially for the metals as a whole, right? So those divergences, you know, we get new highs that are not confirmed. It's a lot like Kiwi and Aussie, right? And dollar SEK and euro dollar, DXY and euro dollar. Those non-confirmations tend to resolve themselves in the direction opposite the divergence. I can't talk today, so if that makes sense. So that's what I'd be looking for. Watch the silver market closely. But if you're near 1275 when silver's hitting support, I think you'd be looking for maybe some support in gold. You might not even get down there because silver's getting pretty close. Copper is still the best chart amongst the metals that I follow. right? We came up into resistance, old lows, consolidating, but it's just that. It's just consolidating at this point. We haven't seen the big drop like we had, say, with the silver market in particular. But with this, I think you're looking at basically the old highs over here. So highs, you know, from September, October, and December, and that's going to be around, you know, 287.10 down to 285.80. So this zone here, 20-day average is there. You've got a trend line very well defined. Maybe it takes a little bit longer to get down here, a week or so, and you'd be kind of in, you know, that's what you want to see. You want to see a nice slow corrective drop rather than what we saw with silver, but silver's kind of a different animal. So that's where I'd be looking at in terms of potential support for copper, all right? Crude oil, pretty quiet, so not a lot of clarity for me, but I will note that we did hit the 20-day average today. You know, during strong uptrends, you tend not to deviate too far below that 20-day average. You can look throughout kind of 2017, late 2017, right? 20-day average is pretty strong. Different animal when you're talking about the choppy uptrend that we saw into last year's high, but you can see that we are hitting that to the tick here today, and you've got old highs here. I still think that 54.50 is a better spot for crude oil if you're going to continue higher. That is well-defined levels from December, right? You got the December high up there. You've also got the January 22nd high up there, all right? And then you've got, you can see one way to look at, kind of think about a level as being important or not is what the market acts like when it goes through it. So it was important, you can see here, right? Test, 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 fail, test, and then you had a big move through it, right, on the 15th. So to me, that level has some validity, and I would be looking at 54.50 as a level for support. If you get below there, I'd kind of say, watch out, crude might be headed lower for a while. So eyes on 54.50 for crude oil. And again, could still get maybe a move up to that 58 handle, which we have just missed, but it is a longer term resistance area up there. It's marked, remember, by the February low from last year, so it's an important spot. I wouldn't want to stick you know, too long with a crude position if you got up there and failed. Okie doke. So that's where we're at in the general markets. At this point, we could just take some questions. I know that some will probably want to look at euro yen. I was hoping that we'd get a bigger move in euro yen up to this 128 area. Not, you know, it could still happen, but with the way the individual legs of this cross are looking, I'm not sure it's going to happen, right? You've got euro looking for a bounce, but probably just that, and dollar yen potentially rolling over. And this coming on the heels of kind of a bearish, you know, candle here on Monday. So might not be looking for a bigger move in euro yen to the upside. In fact, if we zoom into this, if you did get a bounce off of this trend line, I think that you'd be looking at resistance up here, right? Almost double top like. That's the old parallel resistance, right? Resistance here, 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 a little overthrow. If you came back into it, that's where you'd be looking. It'd be up around 127.25 or so. And then immediate downside is going to be 25.50. So we are sitting right channel center. So we, you know, we've got some validity here. But a bounce, you know, start thinking about a short back near the month open at 127. Which would also be the 618. All right. Are there questions? I see Pooja in here. Pooja, did you get the high volume and high market cap stocks or whatever that I sent you? That's kind of where, if you were looking to trade equities, that's where I'd focus attention on the high volume and high market cap stocks, because those are the ones presumably they're going to move, you know, um, technically, if you will, right? You don't want to be trading like Tesla or something, which is a total newsy rumor fad stock, in my opinion. Okay, I do not see any questions coming through right now. So I'm just going to summarize real quickly. I think that we are a bit extended, very short term in the dollar. Okay, and I would be looking for a bit of a pullback, right? And kind of with US dollar, as you get closer to 12,215, this parallel right here, that's kind of where I'd be thinking about, let's look back on the long side. And eventually that 12,320 area all the way up here is going to be the big point of contention. Okay, that's going to be where that's the highs from October, and that's going to be where I think we want to start paying attention to a potential turn. But again, we don't want to think too far ahead. We just want to be looking at where support is on a little pullback in the dollar right here. That's a good spot right there. All right. If there are no questions, and I will say going once, going twice, sold, no questions, then I'm going to wrap it up and get back to business. But I want to thank you all, as always, for your time, and eyes on the prize, right? Let's focus in on these levels and see if we can make some headway here. It's been kind of a quiet start to the year, as we all know. So good luck. Have a great rest of your week, everybody, and I will talk to you guys later. All right. Have a good one.